Hi, I'm Jim and I was retired. I'm going to talk about the Fed again today, and I'm going to do it from a perspective of a DIY retiree. I don't have a dog on either side of the Governor Lisa Cook fight. But let's be clear, whether she's there to vote or not, the FOMC is going to lower rates by a quarter point in September. It's clearly written in the cards. The problem is that there's too much brouhaha. So I want to begin by saying I am a Fed watcher in my retirement. I have been. I've studied this in the past. I use the information about the Fed to decide how I invest my bucket 1 and bucket 2 assets. I do know a little bit about this because I have worked on Fed issues for 7 years in my career. And during that time, I learned a lot about the Fed and governors and the Reserve Bank presidents that make up the FOMC. And you'll clearly see that in my list up here. But at this time, I really just want to focus on, do we really think this is a matter of life or death for the Fed? Lisa Cook is a governor, and she was appointed to a 14-year term. That's by the Federal Reserve Act. I've seen some conservative news channels that say 14 years, I can't believe they appoint anybody to a 14-year term. They're staggered 14-year terms, and it was purposely designed to keep the Board of Governors as free of politics as possible. But they should also be ethical. They can only be removed for cause. And I guess a court will now decide whether President Trump has cause or not. But this is not a matter of Fed independence. This is a matter of one governor. And as my research has shown, 61 of the people who have served on the board, that's 113 of them, that's 54%, have resigned over the history of the Fed. And you know what? The average term, it's about less than 6 years. And you know what? The average term of governors or members of the board, you know what? The length of time? It's a little over 6 years. Even though they are given 14-year terms, they rarely serve that long. Likewise, there's all the controversy of who votes on the FOMC. Should it be all of the Federal Reserve Bank presidents or just 5 at a time, as the current law since 1935 has dictated? Fed presidents are elected by their board of directors at the 12 reserve banks, and they can serve until age 65. They are approved for 5-year terms by the Board of Governors, but that's usually just a rubber stamp of their terms. They have a mandatory retirement age of 65. The governors don't. Some can serve longer than age 65, but only for a 10-year term if they were elected after the age of 55. And no president can serve after the age of 75. I don't know why the Federal Reserve Bank set up these different structures for governors and the Reserve Bank presidents, but it is a quasi-governmental, decentralized central bank, and it's designed to be that way. Now, all of those people that serve on the FOMC also sign ethics guidelines, and they are held to a higher standard than Congress. So whether this is a case of a governor who should go because of violations of the law or that ethics standards, I will leave for others to decide. But I can tell you that in my view, the FOMC is going to make a decision based on their economic readings. Now, I frankly think that they have waited too long. They waited too long in 2021 to raise rates and allowed inflation to reach 40-year highs. That is a monetary policy. I am firmly in the camp of Milton Friedman on that inflation is always and everywhere a monetary policy decision. They waited too long. We got high inflation. Then they started to lower the rates. And then they paused the lowering of the rates when Trump went into office. Why? Was that based on economic readings? I don't think so. I think it was a pause, a purposeful pause, which really has boxed in the Fed at this point because they are now squeezed with a little bit problems on the labor front. Have you seen those latest numbers? And obviously a inching up of the inflation rate. Now, I was pleased to see this morning's PCE rating keep a 2 handle. If it had a 3, that would have really tied the hands for a September rate cut. It would have probably been pushed off till October, but this one stayed with a 2 handle, and that, I think, signals that we will see that rate cut in September. Now, a lot of you aren't going to be interested in this. You think I'm just a Fed watcher, and it doesn't matter. But it does if you have investments and you're trying to decide how long to keep what terms and what interest rates on your investments. And by the way, I only have one primary residence. I only have one residence. I don't have 3 or 4 mortgages to keep track of at any given time. But I digress. And I'll let that play out. I don't know if it's cause. I don't know if it was premature for the president to fire her. But I don't think it matters 1 iota to Fed independence. I've also seen some problems and concerns. Well, you know, we should hold out against Trump and keep on the board. Well, again, the board of governors will have 7 members shortly again. For a while there, I remember presidents depleted the governors. They didn't think it was such an important institution that they let it go without having a full board for periods of time. It does matter. We want the Federal Reserve to be a decentralized central bank, have readings from all over the country go into our monetary policy decisions because we only have $1 for the whole country. We all have to care what that dollar is worth. Here's another reason it matters to average investors and retirees. We all want inflation expectations to be well anchored. And if we think there's too much politics going on at the Fed, that undermines our expectations of inflation. Do we trust the Fed to do the right thing to keep expectations of inflation well anchored? Hey, by the way, will you take a moment to like, subscribe, and share this channel if you like ideas from a DIY retiree? That's my diatribe on the Fed. My Fed videos are not the most popular on this channel, but I do them because I have a passion for this, and I know it influences the direction of inflation. At this point, I'm a little concerned that the Fed may have stalled too long and unfortunately missed some signals of inflation. If they take too aggressive a cut, a 50 basis point or more in September, they would risk reigniting inflation and we would get back to the 1970s. They shouldn't go there, but they should give us a policy rate, and that little rate should be about a point lower than it is right now, in my estimation. And again, I am not an economist. I have no initials after my name, so always take this as just entertaining ideas from one educated consumer to another. Always do your own due diligence and seek out a professional if you need one.